CNBC TV 18, celebrating 15 years of leadership.
Mario Draghi delivers on his promise of whatever it takes. The ECB announces a bond buying program worth over €1 trillion to stave off the deflation threat. The purchases will start in March this year and will last till September 2016.
European markets climb on ECB stimulus measures. The euro nosedives against the dollar, falling over 1%. Shares on Wall Street also wave a thumbs up to Draghi.
I also have a problem of balancing my budget. I can't reduce VAT and then increase income tax.
The finance minister drops a big hint at Davos ahead of the budget, says doing away with MAT on SEZs would mean higher income tax, adds tax stops tough till the government balances its books. Jaitley promises a joint session of Parliament if the insurance ordinance does not go through in 6 months.
Bulls in cruise control on the Lal Street. Sensex crosses 29,000 for the first time as markets gain for the 6th straight session. Nifty nears 8,800, shattering records for the 3rd straight session.
In a bid to pare its debt, wind turbine maker Suzlon sells its crown jewel Senva, and US-based private equity firm Centerbridge Partners shells out €1 billion to back Suzlon's German subsidiary.
Market regulator SEBI eases delisting norms, says 25% shareholder participation not mandatory if the acquirer can prove they had contacted them about the plans.
N. Srinivasan cannot contest BCCI elections till he has commercial interest in cricket. Rules the Supreme Court, says he must choose between the board and his IPL team, even as it gives Srinivasan a clean sheet on charges of covering up the IPL betting scandal, but his son-in-law Gurunath Mayappan and co-owner of Rajasthan Royals Raj Kundra indicted.
Change of guard at Vodafone India. CEO Martin Peters will step down by the end of this financial year. Sunil Sood, who's currently the COO, will take charge.
And our countdown to President Obama's India visit continues. A special report on intellectual property rights, one of the main irritants between both nations, that's coming up.
In a bid to revive its domestic sales, Tata Motors launches its new hatchback Bolt with a starting price of 4.45 lakh rupees. Meanwhile, Merck launches a CLA class sedan priced at just over 31 lakh rupees.
The combined monthly purchases of public and private sector securities will amount to €60 billion. Today's monetary policy decision on additional asset purchases was taken to counter two unfavorable developments. Inflation dynamics have continued to be weaker than expected. The potential for second-round effects on wage and price setting has increased.
Well, as Janet Yellen brings the curtains down on quantitative easing, Mario Draghi has fired his QE bazooka. The stimulus measures announced by the ECB and its impact on India and other emerging markets are top stories tonight. Good evening. Thanks very much for joining us on India Business Hour. And let's head straight to the big news that the markets across the globe have been waiting for. Super Mario has finally moved to deliver on his promise of whatever it takes. The Eurozone's quantitative easing program is here, and it is bigger than what was anticipated. The European Central Bank has announced a bond buying program worth €1.14 trillion. This is bigger than what the street was expecting. Now, starting March, the ECB will undertake bond purchases worth €60 billion every month till September 2016. Draghi said inflation dynamics are weaker at the moment, but he does expect prices to go up sometime this year as the stimulus measures begin to kick in. Well, we are going to get your reactions to the action by the ECB, which is already impacting global equity markets. But let's go across to Davos, where Menika is standing by.
Hi, Shireen, the event that everybody here in Davos has been waiting for has finally taken place. The ECB, just a short while ago, announced, as you already know and have spoken of on the show, a 60 billion euro bond buying program. This will include the purchase of both private as well as government bonds, and so it encompasses the asset-backed securities that the ECB spoke of late last year, as well as covered securities that the ECB spoke of last year. Now, through the course of the week, we've been asking economists and market experts what size of a QE program will be enough for the ECB to stave off Europe's deflationary pressures, and those estimates have ranged from between 600 billion euros being too little to $1 trillion being just enough shock and awe. Well, you have the numbers now. Listen in to some reactions that we got just moments ago after the ECB announcement.
One can always hope for more, but I think it's a fairly decisive issue. A couple of key points are that the ECB has crossed the Rubicon now of doing what I would call plain vanilla quantitative easing, or what for other central banks would be plain vanilla. That is, buying government bonds to expand the balance sheet and inject liquidity into the banking system. Now, the ECB has been very reluctant to take this measure, but now that debate has been had. And this is important because central banks typically, they may take a long time to come to a decision. They're conservative institutions, and the ECB obviously had some challenges with this decision. But once the decision is made, typically there's no turning back. They'll be buying basically government debt securities from 2-year to 30-year maturity. Now, this decision comes on top of, or it incorporates decisions that were made in December of last year, where the ECB announced that it was going to purposefully expand its balance sheet back to a level of around about 3 trillion euros by buying covered bonds, asset-backed securities, and also using targeted long-term refinancing operations.
Yes.
Now, the problem with those measures, particularly covered bonds and asset-backed securities, is it's difficult to get very much scale. So what the 60 billion euros per month includes the asset-backed securities, covered bonds, but now the new one is sovereign bonds, and that will be, I think, the bulk of the asset purchases.
It's better than nothing, but it's nowhere near sufficient.
What would you have preferred in terms of size?
I think you need other things than quantitative easing. I think it's bubble building material, and what you really need is a green growth fiscal program and jobs program and restructuring program that involves a lot more what you might call real economy and a lot less financial paper.
Well, a whole host of reactions there coming into the quantitative easing program announced by the ECB. We'll continue to get your reactions through India Business Hour, but let's go across now live to Davos. Menka joins us. She's spoken with a lot of business leaders, and she has another one with her, Vishal Sikka of Infosys. Menka, over to you.
The ECB did mention that it's an open-ended program, so many of the experts I spoke to said that should be of some effectiveness when it comes to fighting the Eurozone's deflationary problems, so to speak. There's a big debate going on here in Davos on whether a QE program is necessary and sufficient. Well, I think the consensus here is that it's necessary but not sufficient and has to be met with fiscal support from various member states of the Eurozone. But we'll leave the Eurozone issue right there for now, because I have with me a special guest. The chief of Infosys, Vishal Sikka, is right here with me in Davos. Vishal, welcome to CNBC TV 18 and to India Business Hour. You wanted to say hello to Shireen?
Hi, Shireen.
Right there.
How are you?
All right.
Vishal, I'm good. How are you?
Asking you of the many meetings you've had here in Davos and what takeaway, you're taking away from here with regards to the spending environment in 2015.
I think that I have always believed that when the times are good, you need innovation, and when the times are not so good, you need innovation. And that is, so far I have met, I would say, a couple dozen leaders, and that is coming through in spades. There is a tremendous need for innovation in these days, whether it is in the renewal of existing systems and bringing more efficiency to those, or completely new kinds of opportunities that are opening up in front of us. So I just met with a very large financial services company's chairman, and it is true. There is a tremendous need for innovation out there.
What does that mean in terms of IT budgets? Do you think that this will be a year of robust IT budget spending?
I think that it depends on the industry, on the circumstances that companies are in. However, we have to also look beyond the IT budget and at the broader performance of a company, both on the cost side as well as the revenue side. So when you look at it more holistically, we see that a lot of companies are, fighting fundamental disruption in their industries. Sure. And so there is a great need for innovative ways to think about things. And yesterday we met with a whole bunch of our clients and prospects, and everyone seems to be, on the one hand, thinking about the broader economic environment, how to lower costs and things like this. And on the other hand, they are thinking about what does automation mean for us? What is the sort of pervasive digitization that is happening all around us? What does that mean for us? And so on. So I don't see any shortage of need for new ideas and new innovations.
So what does that mean for those of us who measure Infosys quarter by quarter or even financial year by financial year? What do we take away from the fact that will your clients be spending more this year in different ways? So I'm not asking you to specify which ways, but will they be spending more this year than they were in 2014?
I think we'll have a lot more to say on that in April. But the way I think about this is that there is a great opportunity that we see. There is no shortage of innovation to be done in the software world, in the services world. Sure. The bigger challenge is, can we rise up to those opportunities and deliver internally? And that, I think, is the thing that I worry about and I'm focused on the most, is how do we organize ourselves, how do we gear up to serve the great need out there for software. And so the performance depends on not so much on the availability of the opportunity outside, but on our ability to deliver against that.
Okay, I'm going to ask you about that program, which is Renew and New, and the internal capabilities that you're hoping to build. But before I do that, I'm going to quote from a survey done by Goldman Sachs very recently on spending intentions for the IT business, and 52% of the respondents expected a pickup in discretionary budgets in the next 6 months. A 16% uptick from the August reading, and large offshore vendors have been preferring tier 2 vendors. The survey seems to indicate that this is a time when Indian companies can improve market share. Would you agree broadly with these
assessments?
Broadly,
I would agree with that. Yeah.
Broadly, you would agree with these assessments?
Definitely. Okay. I think that there is no shortage of innovation and great projects to be done.
Okay. You had some industry-beating volume.
Equity markets around the world are reacting to all of that. Shares in Europe rising as they cheer Mario Draghi's move to pump in more liquidity. All the major indices have reversed their losses. As you can see, the German DAX up by almost 1%, the French CAC up by almost 60 points, the British FTSE also up by a similar amount. Even the peripheral markets are doing well, whether you look at Spain or you look at Italy and the Greek ATHEX as well, all of them reacting. A sea of green, even at the peripheral markets. On the other hand, the euro has nosedived against the dollar. That was, of course, expected. The greenback is clocking gains of over 1%, not just against the euro, but a basket of currencies. Shireen.
Well, that's the global equity market action. Experts also say that the ECB's move may spark a sell-on news scenario in our markets tomorrow. Ambit Capital's Andrew Holland says the markets may see a bit of a sell-off because the news had already been priced in. The ECB's quantitative easing program, remember, has been factored into the markets. Meanwhile, UBS's Jeff Dennis says the ECB action will contribute to a turnaround in inflation expectations and is good news for emerging markets.
We might see a bit of sell on the news. This has been pretty much expected, but I think in terms of the scale, it's a little larger than the market was anticipating. So I think all eyes will be on what Japan does and what China does. I suspect we're going to see more stimulus packages, particularly from Japan and in China, probably through interest rates, will try to stimulate the economy. So the first quarter is definitely going to see more stimulus, more money trying to go into the market.
Do believe that this action will continue, will contribute to a turnaround in the inflation expectations. We also make the point, our economists make the point, that the inflation story in Europe coming down most recently has, of course, been contributed to by the drop in oil prices. Eventually that drop in oil prices will drop out of the year-on-year comparisons, and we do expect inflation, therefore, into the second half of this year, begin to pick back up again. So we do think this will work.
Let's get back back to the day's trading action. Infosys, of course, is going to be one of the stocks to watch out for. Ticker sounding confident there. The bulls are in cruise control on Dalal Street as the markets gain ground for the 6th straight day, and records were broken for the 3rd consecutive session. The Sensex cracking another century to cross the 29,000 mark for the first time in history. The Nifty continues to march towards 8,800, gained about 30 points today. Mid-caps also gaining, but they continue to marginally underperform the blue chips. Here's a quick check on crude prices. The commodity did stage a 2.9% rally earlier today, with Brent crossing 50, but ahead of the ECB decision. That was the up move that we saw. However, post that decision, some of those gains have been erased. So Brent now at 48.78, and that is where we are seeing crude headed at this point in time. Let's just listen in to some reactions.
Sometimes we look at market events from a microscope, but if you look at it from the perspective of a telescope, maybe the insights are different. 10 years ago at this point in time, crude prices were trading around $40. Today is just shy of $50. A year ago, of course, it's trading at $100. So in some respects, what we've seen in the last 3 years of a stable $100 price regime is actually unusual. Where we are today is actually the norm, a point of volatility, which of course is what you'd expect in a commodity cycle.
Well, that's the man from BP saying low crude prices may be the new normal. Now, tax relief, especially economic zones, is unlikely in the upcoming budget. A clear hint from the finance minister, who's at Davos in an interaction with CNBC's Andrew Ross Sorkin. The finance minister said that doing away with MAT on SEZs would mean higher income taxes, which of course the government cannot do. And the tax ops are tough to provide unless and until the government balances its books. Listen in to what the finance minister has to say.
Petrol is now linked to the market, which was subsidized. Diesel has been linked to the market. As far as LPG is concerned, the first subsidy reform has started this month. On the 1st of January, all subsidies with regard to cooking gas now go directly into the bank accounts. So almost 150 million families in India will get them. The next stage, we have to carve out the families who are not entitled to it. And therefore, that will be the reform as far as the cooking gas is concerned. There are, of course, areas where there is a misuse of kerosene subsidy. Kerosene is used both as fuel and also in dark areas in India. But kerosene is also being misused in many areas. So the next area we intend tackling is kerosene. I had appointed in the very first month an expenditure management commission. They've only 3 days ago given me the interim report with regard to rationalizing some of these subsidies. The Prime Minister last week in a major address on economic issues had said, subsidies for the poor will remain, but we intend rationalizing them. And that's the area where we intend to move in order to cut down some part of the expenditure in order to finance our own activities. We have targeted a fiscal deficit of 4.1%, but that's not also acceptable as far as we are concerned. We have a roadmap to bring it down to below 3% over the next couple of years, and we intend to maintain those targets.
What about taxes?
Well, we've said that we are not a high tax government, and therefore last year I almost didn't increase a single tax. We believe in putting more money into the hands of consumers. Therefore, there were 3 sets of reliefs that I had given in the very first interim budget to small and medium level taxpayers so that they could spend more. We look at taxes. We are correcting the inverted taxation, which can hurt certain sections of the industry. But of course, taxes are needed in order to finance the running of the government.
There was a lot of discussion on encouraging manufacturing in India, and for exports. So I was very curious to know your views on MAT and how you see that perhaps being lowered, or what your view is on that, and maybe how that could also encourage and incentivize and encourage more manufacturing in India. Thank you.
Certainly, if I was in a position to get rid of MAT, as many people, particularly in the SEZs, etc., are also been saying, it will help you in lowering the cost. But then I also have a problem of balancing my budget. I can't reduce MAT and then increase income tax, because the money has to come from somewhere. And therefore, till such time, we are not in a position to balance our accounts. For any finance minister to give, withdraw this tax or withdraw this tax is not so easily possible. In the current year, I may just indicate, we made a significant progress as far as our direct taxes are concerned. But when you have a low on manufacturing, the manufacturing taxes collection has suffered. And therefore, it's a great challenge for us to balance our budgets. So unless we are in a position to up the manufacturing so that my overall tax kitty moves up, it's not so easy for any finance minister to then start offering rebates.
Vivian Riefberg with McKinsey & Company in Washington, D.C. If we go back to the discussions with the U.S., what is the one thing that you want to most see change?
Well, as I said, economic and security issues are foremost in our mind. I think our economic relationships have been progressing well. We are also concerned about our region. And our region throws up challenging situations, particularly with regard to security. And we'd like a much greater understanding with the United States with regard to the regional issues as far as India and the region is concerned.
My name is Adib Ahmed. My question is on an financial sector. It's actually twofold. The first fold is that recently there has been an announcement, and of course the spirit is very high for the NRIs to actually invest back in India. So the first question is about the recent licensing procedure on a small bank that recently came up. But we were very surprised to see that there was a restriction on NRI investment on the sector because 51% needs to be resident Indian ownership companies. On the second fold of my question is, at the junction now where there is a lot of need for investment in infrastructure, there has been a cap on investment in banks in India, which restrict to on an individual capacity is around 4.99%. Is there a possibility that this limit would be increased?
Well, on the eve of the budget, I won't give you an answer in yes or no, but I'll take your question as a suggestion. In fact, your suggestion with regard to attracting more NRI investments is an issue which is actively under consideration.
I think the finance minister more than hinted over there that perhaps we should not expect a rollback in MAT when it comes to SEZs. He's also going to look at a suggestion of how to increase NRI investment inflows. Now, the other big story we're tracking today coming in from Deal Street, in a bid to pare its debt, wind turbine maker Suzlon has sold its crown jewel, Senvion. The US-based private equity firm Centerbridge Partners will shell out €1 billion or 7,200 crore rupees to buy Suzlon's German subsidiary. The all-cash deal is expected to be completed by the end of this fiscal, of course subject to regulatory approvals. Suzlon will use Senvion's offshore technology by paying €40 million as license fee every year. Senvion, on the other hand, will pay €70 million every year to use its non-shore technology. Here's Suzlon's Tulsi Tanti and how the company's balance sheet is going to improve post this transaction.
Current our interest is 1,600 crore is there on the full year basis. It will reduce by the half. With the 800 crores reduction with the interest. It's a two-way. Out of 7,200 crores, we are paying 6,000 crore rupees to the Indian bank lender in a rupee payment, and 1,200 goes for the operations for the growth. But same time, 3,000 crore is the FCCB bondholder is there. They have an opportunity to convert it to equity. So this way, 16,500 crores debt will come down to 7,500 crore, and my interest cost will go down to 50%, 1,600 to 800.
Well, that's Suzlon Tulsi Tanti, and Pragya joins us now with the details of this deal and what it is going to mean for the company and its road to profitability. Pragya, are the debt concerns now behind the company?
Well, you know, this is definitely a shot in the arm for the company. At least in the interim, they will get some breathing space and will be able to address the liquidity crunch that they're having on some of their existing projects. The concern of the street is that, you know, one of its best subsidiaries, its largest subsidiaries, contributes over 50% of the revenues, has actually been sold at less than one-time sales. But, you know, the management did not answer that question. However, they said that the strengthening of the balance sheet was the top priority for them, which is why they had to take this all-important strategic move as well. Now, like Mr. Tanti was saying, this will help the company deleverage its balance sheet to the tune of 6,000 crores just from this move, wherein they'll use the corpus of 7,200 crores, out of which 6,000 crores will be used to pay off the domestic lenders. In fact, he made promises that Suzlon will turn profitable by FY16 end. What we understand is that the blended interest cost of the company will come down from 10% down to about 7%, translating into interest cost savings of just about 500 crores annually just from this deal. And, you know, the yearly interest outgo which the company had of 2,000 crores will come down to now about 1,500 odd crores. However, management's numbers, as you heard, were slightly different from that. Apart from that, he also, you know, gave out numbers that Senvion contributed roughly about 50% to the company's consolidated revenues. Our number crunching threw up slightly different numbers. I'm referring to the details that we have for FY14 consolidated numbers. Senvion had reported revenues of close to about 13,000 odd crores. They had profits of close to about 1,000 crores. It was a profitable entity for them. Not just this, had a very impressive order book of close to about 10,000 megawatt, which no longer will form a part of Suzlon's financials. Ex of Senvion, Suzlon's financials, the sales should actually come down to 7,000 to 8,000 odd crores, and losses in fact should actually exaggerate from the current 3,000 crores over to 3,500 crores, even if you account for that interest payment. And that is probably why you saw that stock reaction once the street understood the math of it. And we'll have to see if the management, makes good on its promise that it has set out of turning the company profitable by FY16. And for now, it's definitely a positive news for the company.
Suzlon Energy stock was down almost 7% in trade today. Thanks, Alpragya, for joining us with that analysis. Key lender to Suzlon, SBI, is happy to see the Senvion deal go through. Speaking to CNBC TV 18's Menika Doshi from Davos, Arundhati Bhattacharya said the bank has been pushing Suzlon's promoters to sell Senvion for a long time.
We have been pushing with a lot of people to sell assets in order to deleverage balance sheets. Yeah. I think this deal of Suzlon is precisely in that line. The entire proceeds will go towards repayments of debts. And to that extent, you know, Suzlon, the interest burden will come down substantially. It should enable them to turn around and become a much bigger and a better company because of the lessening of the debt burden and because of the huge opportunities that the Indian economy is now throwing up.
Well, the lender pushing the promoter to sell, and finally that deal going through. On that note, it is time for us to wrap up this edition of India Business Hour. There's plenty more to talk about. Stay on with us. You're watching CNBC TV 18.